So at this point, you are starting to get a little bit nervous because I haven't got to anything yet. But this is actually on purpose because I wanted to get out of your chart mindset and indicators mindset as far as I can, as much as I can, so you can be clean when it comes to go to price activity and how we are going to be reading prices and finding those confirmations and finding those market intervals that we are going to learn how to do. So the price activity, you have the buyer's market area and the seller's market area. And also we have trend markets. So let's give an example. In the FX market, there's no such a thing as a buy trend or a downtrend because you have one currency against the other. So you have either the market trading with the euro into a buy market area or into a sell market area. It's not such a thing as a trend market. One year you can have the euro down, and the next you can have the euro up. So there's not a downtrend or uptrend. Instead, the indexes, the index market, S&P, the DAX, the FTSE, whatever index you want to talk about, those are trend instruments. They always tend to go up. They're only going to go down when it comes to a correction momentum or a situation where we have the market into a crisis or those sort of context. But there's no such a thing as sell market area and indexes or buy market area. The same for oil. Oil tends to go up. It's a trend market. Those markets that are trend are also only in trending up or crisis. But the FX market, there's no such a thing as trending markets. Those in the FX market, euro, dollar, pound, dollar, yen, dollar Canadian, also gold. Gold is a trend market, but we can also have years where there's some sort of sell area, and then some years is more of buyer area. Okay, we're going to know the difference between them. So buyers are part of the markets where the instruments are valuable enough to keep prices pushing higher. Buyers will hold on into their investments, and sellers are only a small part of the daily strategies. So you can short in a buy market area and you can buy in a sell market area. You can do both. But what's important here is to know who owns the area, who owns the market activity, the price activity. Okay, now in the trend market, it's a different story because some years you can have tons of corrections. Some years there's only correction for trend markets, but there's no such a thing in buyer's market area or seller's market areas. We're going to talk about it, how we change from seller market area to buyer market area and buyer market areas to seller market areas. And that goes on along the year, the entire year, switching areas all the time. Sometimes the currency, for example, they don't switch areas and you only have the euro into the sell market area. Or some years you have the euro into buyer market area and they don't switch. They're always in just one market strategy. So that way you know what to expect, because if you're in a buyer market area, you know what is expected to happen is new highs every time. And if you are in the seller market areas, you expect new lows every time. Now, in the trend markets, like the indexes, the S&P, the NASDAQ, whatever, then those are only expected to go up. And you have to identify the right timing for the crisis or the correction that is going to happen. And there are signs to know when that is going to happen. We're going to talk about it in the next few videos.